All right, what's going on? How you guys doing? What's up, Tonka, Ginger, Optimus, Yush, Harpreet? Let's go right into it. Obviously, a pretty bullish day today. We had another dip in the morning, just like yesterday. It's very, very similar to what happened yesterday. If you guys zoom out on the chart here on SPY, real quick, we had a uh, dump pre-market, and then the dump just continued into the day when we finally found a bottom, bounced a little bit, and then we found the actual bottom. So this actual bottom, maybe this was the bottom, and they just shook out the rest of the bulls here. Got some more shorts stuck in here, and then they ripped it on them. Came back up, retested, and ripped the rest of the day. Very, very similar to what happened today. Weak pre-market falling into the open, completely dumped, bounced a little bit, came back down, tested almost a double bottom here, and then just ripped into the end of the day. We also closed, what's up, Vladdy? Also closed at high of day. So if you're just looking at SPY here, it looks pretty bullish. Like this action is pretty bullish compared to what yesterday. And it does look like more and more that a bottom was established here. We did cross back over the 50-day moving average, which was at 465.62. We closed well above that, almost 5 points above. The 21 days at 468.96, so we closed above that. And the 8 days at 469.67. So we close above that as well. So we close over all three moving averages all in one day. What's up, Ricky? We're back over this little support that we had drawn out, and everything looks fine. Everything looks great. Yesterday, big volume. Today, not as much, but that's okay. Remember, in a melt up, the volume can be decreased sometimes. Right now, there's not much to say. I mean, these charts can get absolutely destroyed tomorrow with the CPI number. Everyone knows the biggest worry in all of the US and most of the world right now is inflation. So, what I'm thinking is everyone knows there's inflation. Everyone can see inflation daily. That number's already going to be very high. They're going to estimate it. I haven't looked at the estimates yet, but I'm expecting them to estimate over 7% inflation. What's up, Andrew? And if they estimate over 7%, is it priced in? Is it not priced in? Like, is this dump enough to price in a 7% inflation? Remember, the Fed wants inflation at 2% standard every single year. So even if the estimate is at 7 and the inflation number comes in at 5%, this market can take off back to all-time highs. If the inflation number is at 7 and the number comes in at 7, this market can still take off. But if the CPI number comes in hot, if it comes in over the estimates, I think that a bigger dump is coming soon because the Fed will be left with no choice at all but to raise rates and balance sheet runoff. So that's all that matters tomorrow. Tomorrow 10 a.m. CPI number, everyone should be there ready to trade. If you're a day trader, there's going to be a lot of volatility. I know Taka took some strangles today. I like that play. Why do I like that play? Because there will most likely be a big move one way or the other off that inflation number anyways. And also I think Powell testimony is again tomorrow. I think it's a 2-day thing. So right now everything is about the CPI number. As you guys see, we have a resistance up here at 471. 471 resistance. We have a support down here at 465-ish. So this is the range that we're going into tomorrow. 471 to the upside and 465 on the downside. So those are the two numbers you need to be watching tomorrow. Depending on where we close tomorrow, that can set the trend for the market, what it's going to do into the January 25th number. So basically, if we close above 471 tomorrow, we can go back to all-time highs. If we close below 465 tomorrow, we can come down and break the lows again. I mean, if you guys look around at the world around you, economy, everything, everything's looking bad. Like we're going back into lockdowns, economies. I mean, unemployment's less, but there's jobs number. No one wants to work anymore, and it's just a mess. If you look at it under the covers, obviously, none of that matters when it comes to the stock market. The stock market leads the economy; it doesn't follow the economy. So basically, what we're looking at is the world is in a mess. Everything looks messy. People are calling for the biggest crash, depressions, recessions, dot-com bubbles. And SPY, sorry, I'm looking for the indicator. I don't know where was it? Right here. So with all that being said, all the chaos in the world, coronavirus, everything, right now we are currently sitting at -2% from all-time highs on the SPY. So you guys can think about that, take that in. We're 2% off all-time high and the world is a mess right now. So if stuff does start hitting the fan, there's a lot of downside on SPY in my opinion. If we come in line with inflation tomorrow, none of that matters, and we will probably rip to all-time highs. QQQ, same kind of story. There's a big weekly channel I'm watching right now. We are back in it. Like I said yesterday, if we get back in and close in it, we can just rip right back to the top of this channel, which would be all-time highs on QQQ as well. But the thing with that is that channel was drawn on a weekly time frame. So this is a weekly channel that we're watching, ascending channel. And for it to be valid, we need a close on Friday in this channel. Not a close on Monday, not a close on Tuesday, but on Friday. So if we do close within this channel on Friday, the uptrend continues. I'm almost certain of it because of the weekly uptrend channel. Right now it looks good. We did close above there. There is a lot of volume coming in here. There's a lot of bears out there that are betting on the end of the world. But if we do close the week in this channel, it's all systems go. I think the market goes up to all-time highs again. XLF has been stronger than all the other sectors for the last couple of weeks now. As you guys see, we're trading right at all-time highs here. That's because if they raise interest rates, that means banks make more profit. That means banks go up. They're worth more. So right now, XLF is firing off new all-time highs every day for the last 5 days. And then today, finally, we didn't make an all-time high. We have bank earnings starting Friday. So that's when we'll get a better picture into financials here. IWM, absolute ripper. While everything else was going sideways today, IWM was going straight up in a line. Ricky pointed it out once. I just expected it to be doing the same thing as SPY and QQQ, but I took a look and it looked much stronger. Jesus, that's a messy chart. But we have a base here from all the way in January, guys. We have very clear ascending support here. We broke below it a couple times, but we bounced right back above it the next day every time we broke that support. So right now, yesterday, you see that candle save right here, kick save, way underneath that support line, and then we close with a hammer candle above it. Continuation today, but one thing I do want you guys to pay attention to, I'm going to start it off on IWM because SPY and QQQ aren't that far off their all-time highs like the rest of the stocks are. Minus Google, Facebook, Amazon, Apple, right? IWM hasn't even reclaimed its 8-day moving average yet. So in a bear market, I'm not saying this is a bear market, I'm not saying it's a bull market. What I'm saying right now is when we have these little downtrends in stocks, this 8-day moving average, sometimes it acts as resistance. So when stocks bounce back, obviously you can't just go straight down in a line. We can't go straight up in a line just as much as we can't go straight down in a line. So there's little bounces along the way, and sometimes those rallies are vicious. Right now, IWM is still under the 8-day moving average. It's all the way up at 218.62. So we still have $1 upside on IWM until we even test the 8-day moving average. It's going to be a recurring theme in this post-market, so that's why I brought it up early. Let's go to the ES here. I sent you guys the levels this morning. The levels today did not work. It was just slicing through everything. Let's go on a 5-minute chart, actually. It'll show better. So we sent these levels this morning. We had 46.39. Put wall was way down at 45.89, guys. So we had 46.39. 45.89 was a put wall. 46.39 first level. 46.59, 46.82, and 46.89. And today we were just slicing through them. We were holding through it pre-market, and near the open we were holding just above this 46.59. Finally, big dump as soon as the market opened. Another big dump right through the next level. Then it started acting as resistance. Got back through, flushed below again, double bottom, and ripped the rest of the day. So I'll send these levels again tomorrow. There will be new levels. Just make sure you guys draw these in the morning when I send them out. It helps trading a lot. It's much easier to take calls or puts based on where ES is on the chart as well. So VIX finally looked like it was going to have some action today. Absolutely nothing. Took out yesterday's low, took out Monday's low. Is today? No, took out Friday's low and Monday's low, all in one candle down. Clear rejection from that resistance I have drawn at 21. So 21, 18.69. And that was the range that we were trading in the last 4 days. Today we broke underneath and we closed below. So if that's it for the VIX pop and it starts coming down, there can absolutely be a melt up back to all-time highs. What I'm watching for on the VIX here is if it sets a higher low. So remember when we had this last collapse in the market, we called it. I know a lot of people say charting VIX is useless, but as you guys seen, we set a low, we set a higher low, set a higher low, and then it just kept going all the way up till the last spike there. Then we cooled off, compressed a little bit, and then a huge spike again on December 20th. So right now, again, we are compressing, big pop, and now do we set a higher low? As long as the VIX stays over this 1634 level, so 1634 on VIX, as long as we stay above there, and that's our low, that means they're putting in the same pattern again, guys. So we're going to put in a low, we're going to put in a higher low, higher high, and that's the daily trend changing on the VIX. So keep an eye out for 1634, very, very key level. If we break below 1634, the market's going to be at all-time highs, in my opinion. So just watch these, and on any bounce in the VIX, watch 1869 as resistance and watch 21 as resistance. Bitcoin, very solid hold so far. So you guys know there was a very, very tricky situation in Bitcoin there. Huge support was here, but also there was a bunch of people. No one was scared. Like I've seen on Twitter, I've seen online, even members of our own group, no one was scared of the Bitcoin dip. They were saying buy the dip, buy the dip, buy the dip, buy the dip. Right now, the market and Bitcoin is correlated so well that if market sees a big red day, Bitcoin will probably see a big red day. Market rips, Bitcoin rips. Like it's just happening like that. Yesterday, big poke below the neckline on the head and shoulders daily, just to get in some more shorts or to stop out some more longs. And then we ripped right back above again on this Bitcoin. What I need to see for confirmation that it's trying to change the trend, and this is not just an oversold bounce, we need to close above this 8-day moving average. So as you guys see here, 2 hours and 45 minutes left till this candle closes. Bitcoin needs to close over its 8-day moving average, which obviously it shifts a lot because Bitcoin moves so much, but 43,060 I'm going to put right here. If we get a close above that, then Bitcoin can start to make a trend change back in the favor of the bulls. But as long as we're under there, this is nothing more than a oversold bounce. Because look at the daily RSI, guys. It was oversold. Everything was oversold. You can go on the 4 hour, you can go on the 1 hour. Everything was oversold here when we got to the support. Obviously, a little oversold bounce was due. And right now we're battling with the 50-day on the 4 hour. We're going to battle with the 8-day on the daily. So we have to go up, close above the 8-day, set a higher low. Again, we're not going to go straight to all-time highs. As I hope you guys know by now watching my videos, we're not going to go straight like this to 60K. We're going to have to go up. We're going to have to set a high. Then we're going to have to set a higher low. And the higher low has to be higher than this line. And then we have to put in another higher high. So we have to change the trend back in the favor of the bulls. First step to that is that 8-day moving average close today. SQQQ, I jumped in some more calls here. Why did I jump in more calls? It's a cheap hedge. I mean, anything can happen in the next few weeks, guys. We have inflation tomorrow, which will bring volatility. We have Powell talking. We have the OPEX next Friday, which will definitely bring volatility. The calls were 14 cents, $7 calls. And if we do get our move, I mean, last time we hit these for 500%. Let's see if we can get them for that as well. But if we do get 500% for these, expect a lot more downside in the market as well. Right now, it's just little tiny resistance I have drawn out from before. So if we do get above $7 here, those calls will probably be another 400, 500% play. So let's see if we can get the move on that one. Other than that, I mean, there's a lot of uncertainties in the market still with all this Fed changing everything. Yields came off nicely today. They did need to cool off. Another reason, this is a very, very bullish breakout, guys. Remember, it's a little cup and handle kind of thing. I don't know. I don't even know what they call this. But it was just a big round bottom breakout of a huge level. Obviously, we can't just go straight up in a line, like I said. As long as, see, this is the scary part about yields. This is another reason why I want to stay hedged for a while. As long as yields stay above here, like I would say this low right here, as long as they stay above 145, that would just be a higher low on the daily, which is what I just went over with you guys. When a stock is in a trend, it puts in a high, it puts in a higher low, it puts in a higher high, and that's how it moves up. Right now, yields have moved so fast, they haven't left much support down here. So basically, any close above this low right here, as you see it going in a straight line, any close above this right here, down here, this support, that would still be a higher low on yields. So obviously, we're not going to just rip straight. This is 6 days straight up on TNX. What's up, Phil? How you doing? And what I'm watching for right now is to hold this area. This 172 and 169 area is a strong area if you zoom out all the way. There's a lot of supply and demand in there. So buyers might show up for yields inside that little area there. And a lot of what happens next in the market is on that CPI number tomorrow. So just make sure you're paying attention to it, whether you're trading or not. It's going to be very, very important for the economy. So let's get into the 8 days. I told you guys yesterday very, very clearly. Ricky told you SE would go to 200. I agreed with him. Why? I said 198. Obviously, I was a little bit lowballing. But why did I say that? Because, again, this is a very, very clear downtrend, guys. Look at this. Let me show you. It doesn't get more of a clear of a downtrend than this. Every single time we've bounced, 8-day moving average reject and down further. 8-day moving average reject and down further. 8-day moving average reject, down further. One time we broke out, then we rejected the 21-day and continued downtrend. So right now, while this bounce is nice, everything is nice, we closed on SE at 197.86. 197.86 was the closing price. The 8-day moving average is at 198.30. So we're still below the 8-day moving average, even with that wicked day that SE had. Still closed below the 8-day moving average. Still not a trend change. Tomorrow we need to close above the 8-day moving average or this bounce is over. So this is why I am still leaning towards the bear side. I'm still hedged. Everything, there's no proof to me here. And SE is like the poster boy of growth. So if you look at this one, we closed below the 8-day moving average. Growth has been getting killed with the Fed saying they're going to change interest bond yields. Dawkins closed 10 cents over the 8-day moving average, but Dawkins' trend is not as clear. As you guys see here, we did close. It's the same kind of story. We're in a downtrend. Every time it goes to the 8-day, it kind of rejects. Closed above, a couple of candles above the 8-day, but we still rolled over. So that was obviously a bull trap here. The reason I showed you SE instead of Dawkins is because it's so much more clear. Like, look at this. There had, like, none of them. There was one bull trap in the last, since November 16th, there's been one bull trap on SE where we closed over the 8-day. So just pay attention to that. We need stocks to start closing above their 8-day moving averages and setting higher lows, and then we can start talking about 21 days and trend reversals. That's why I haven't added any equity yet. I know a couple of my positions are down. Palantir's down. I'm not worried. I'm waiting for some kind of trend reversal signal, and then I'll start buying more of those. Even Snow, look at Snow's well below the 8-day. 8-day's at 310.26 on Snow. We closed today at 301, still 9 points off the 8-day moving average. Again, on this whole downtrend, closes below the 8-day, reject the 8-day, bounce to 8-day, all ride the 8-way all the way down. As long as we're closing below it, I can't say the bottom's in. It's impossible. And anyone that does, I don't know, like, what to tell them. Here's Facebook. Looked like it was forming a little head and shoulders here. It held the neckline yesterday. We made some money in the calls. If I held, obviously I would have made a lot of money. Again, I'm trading day to day right now. The CPI numbers, Powell testimony. There's too many unknowns right now in the market. So most of my stuff, I'll either only hold puts overnight or I will scalp during the day. That's about it. So right now I'm still in a sell the rip or short the rip environment, not a buy the dip. I'm not buying any of these yet. But Facebook has all the moving averages all tangled up here on the daily. You have the 21 day at 337, 50 days at 333, 21 days at 333, and the 8 days at 333. And we closed above 3 of the 4. 200 day is above $4 more of a move, and we get to the 200 day on Facebook. So obviously if Facebook goes, the market's going to go. So that's one thing. If Powell says something about inflation, even if Facebook drops news, I mean, it's going to depend on the market, right? And SPY, again, we're only 2% off all-time highs, guys. So Facebook looks good for a continuation. If the market turns bullish, I do think if we get back above the 200, algo buyers will kick in. I learned this a while ago from one of my friends. He said when a strong stock crosses back over the 200 day on the daily from the downside, usually algorithms start buying it. So let's wait. Let's see if it gets over 337. Again, everything depends on the CPI number tomorrow. NVIDIA, we gave it to you 362. Bookie told me to chart this one. I said if it gets over 262 yesterday, it can run. Got back in this range, and now we're right at the bottom of the range. If the market wants to run, Nvidia can go all the way to 300 again. In my opinion, if we want to roll over, we can roll over and lose the lows as well. Amazon, what the hell is that after hours? Okay, that's a big algo candle. No big deal. Amazon, yesterday Ricky jumped in calls and I told you this is one of the most bullish candles there is. So once we're in a downtrend and there's a big gap down and dip on a stock, and then it recovers and closes a hammer candle like this, that's a very, very bullish. I forget the name of the candle, but it's a very, very bullish. It means sellers are exhausted and there's only buyers left to buy it. Big volume, big hammer, reversal. Looks good. Again, the 8-day moving average is at 3,300. We closed above it. So we closed at 3,307. Amazon's beginning. So what you need to know also is big tech bottoms before the rest of the market. So if this is the bottom, Facebook closes above its 8-day, Amazon closes above its 8-day, Google closed below its 8-day. That's shocking. Okay, Google 8-day is at 2808. So watch that. Microsoft. So kind of a mixed bag even from big tech. That's Microsoft's well below its 8-day moving average. Apple. And Apple 174.87. We closed above it on Apple. So kind of a mixed bag for big tech still. We need closes above the 8-day to confirm that this is not just an oversold bounce and we want to go higher. Google closing below the 8-day is kind of shocking to me, to be honest. But let's see if we can get over them tomorrow and close above them. Because if they reject the 8-day, it's still a downtrend. There's still more downside to go. So just keep watching those 8 days, guys. And even if you just attended my post market yesterday, you guys knew exactly where to sell SE. So if you were watching the 8-day moving average at 198.30, let's say you had calls, and I know a couple of people did. That's why I'm going over this right now. Say you held SE calls overnight. 198.30 was right about here. So right at the top right here. Right at the top. We did get another rip over it, but we closed below it. So you know what I mean? You had a target, you had a clear play in front of you, rejected the 8-day, closed below it, and on we go. Snow is still far away. We already went over that. Tesla, no man's land here. In my opinion, I have no play on Tesla, swing play at all. It's just the same thing. Like we went down from 1201 all the way to 980, guys. So it's like a $220 move down, and so far we've bounced 95 points. So more than 200 down, almost 50% retrace. So what do I say always? There's always consolidation. As long as the consolidation is less than 50%, that's healthy. What do I mean by that? Just like this, you see this big rip, bull flag. As long as this bull flag doesn't consolidate 50% of this up move, it's a healthy bull flag. That's why we ripped up. And it's the same thing on the way down. This huge move down, as long as it doesn't consolidate 50% up, it's a healthy consolidation, bear flag, back down. So don't be surprised to see Tesla go back down a lot. Adobe. Held these puts overnight. Why did I hold them? Yash brought it up. Same story, guys. I'm just using the 8-day moving average to trade these days. Big downtrend ever since December 14th. Cannot get back over the 8-day moving average every single time. Just curls, hits it, goes down, curls, hits it. Today, same thing. Rejected off the 8-day moving average. If this continues a downtrend, I do see new lows coming on it. 497 is a low. We have 500 puts. Let's see what happens tomorrow. If we close above the 8-day moving average tomorrow, you'll probably have no option but to cut those puts. Very clear plays, very these 5-minute candles can trick you, but the daily candles aren't lying to me right here. MasterCard 366.50 is the 8-day moving average. We closed at 366.29. So we closed just 20 cents below the 8-day moving average. These puts were great. I mean, we bought them for 150. We were selling them for like 5 yesterday. The runners I had on today, I got rid of them for like 2 or something. I don't even remember. But right now it's the same story. You could argue that this looks like a bull flag, big move up, big move, but we did give back 50%. That's not healthy consolidation. So MasterCard is just kind of in no man's land here. I think there's better puts out there. I think there's better short setups out here. And yeah, we'll go over HD for bookie. I went over it earlier in the day today. The thing I was telling Yash, he was asking about HD. So there's a very clear triple top here to me at like 415 area, 414.84, 415 area. Very clear triple top. Keeps rejecting there. And right now what it's forming is, it could be forming a shoulder, a head, and another inverse head and shoulders, and rips through 415. So what I was saying was, there's a clear line here, resistance and support, 393 area. I'd say around 393-ish. Yeah, about there. I had it drawn from a long time ago. 393 area was a clear resistance slash support. So right now on HD, if Home Depot gets above 393, I would take calls to play it till at least 415 and beyond, because it's forming an inverse head and shoulders. If we stay below 393, this is just a textbook bear flag retest, and we can dump farther. So that's all I think about HD. I am not in a play on it right now. But if we cannot get back over 393, I do believe puts are the play on this one. I mean, you can look at the weekly, you can look at any chart. It's pretty extended any way you look at it. There has been healthy consolidation for a little while here at the top. Is this the very top for HD, short-term top? It's possible. So let's see how it is tomorrow. Just keep an eye on that 393 level. Over 393, calls can work back up to 415 and above. And if we reject 393, 390, 380, puts can be in play on Home Depot. Last chart I'll go over here is Zim. I call this one out at 20. Everyone knows this. This is where I was buying. This is where I made my YouTube video saying the stock is going to double. I've been holding it ever since. I did scale out a little bit and add some more back. But right now, this is a beautiful setup. Even now, guys, just because I got in lower doesn't mean you can't get in now. Perfect cup, perfect handle, and perfect breakout on increased volume. They have a special dividend for investors. I think it's 25% one time a year. And just an all-around solid company. This is a shipping company. Shipping is not going anywhere. It's not tied to the indexes. And one example I want to show you guys. You guys think it's extended because it's up maybe 9% this week so far. But look at this. This is just the beginning of the cup and handle breakout. Let me show you something here. This is ABBV. This is the one from the newsletter that I drew out. This is a weekly chart, guys. Weekly. So the breakout point was 119.62-ish, 120, whatever you want to use. 1 week up, 2 week up, 3 weeks, 4 weeks, 5 weeks, 6. This is a 6th straight week out of that cup and handle. Ricky Disney, play please. Disney, I can't go over strangles. I can go over the chart though. I don't really do strangles. That's Ricky's area of specialty. I'll sure he'll go over it tomorrow. But for Disney right here, you see I have the fibs drawn out already. I was actually looking at this for a dividend play, but then I Googled it and they don't give a dividend anymore. So I'm not really interested in equity in Disney. Option wise, I would not touch this thing unless it's over 160.52. Why do I say that? Because we're trying to bottom here, but for right now, until we're over 160.52, it's just going to be chop. And again, we had bad earnings. So once this thing starts going, you won't miss the play. 160.52 breaks. It has a huge gap to fill all the way to 173. So an 11-point move possible. We just have to wait for a break of this bottom 162.50 level. 160.52. Sorry, just so you don't get confused. And under there, I mean, I don't really see a play. The 50-day moving average is at 156. We closed above that today. 200's at 170, so that's way above now. So there's going to be a lot of supply here, a lot of people selling. It's going to be a hard move over. But once we get through this 160 and 50 cent level, I think Disney can make a move. So just set an alert on that one. Once it gets through there, you can play options all you want. I mean, equity is not attractive to me anymore because they don't have a dividend. But options-wise, I'd wait for 160.50. Thank you guys for attending. I hope you guys had a great day. Let's see what the CPI says tomorrow.